Hi traders! So in today's video I will tell you the 7 steps on how to become a professional trader with algorithmic trading. Of course it is suitable for manual trading as well, but I think most people can't handle manual trading, and algorithmic trading is hard enough to learn for most people. And in fact, algorithmic trading, in my opinion, can be much more efficient than manual trading if you use the right EA, the right robot. And it is because it is a systematic trading profile. You can diversify your strategy portfolio that you couldn't do manually, because you can use strategies this way that were created by AI systems and that aren't tradable by hand, you know, and with your eyes and stuff. And so algorithmic trading, in my opinion, is the best way to trade, but you have to consider what kind of trading algorithm you will use to be profitable. So the first step is backtest your strategy. Now, how you should backtest your strategy? You should backtest it for 10 to 20 years with 99.9% tick data, with slippage calculated, and with variable spread, and with commission. It is really important. If you will trade with the strategy, you know, on multiple currencies, you have to backtest the EA for multiple currency pairs. It is really important. And also, if you will trade on more volatile pairs, you have to calculate the spread accordingly. These are all really important things when you are backtesting, and backtesting is the first line when you start to trade with an algorithm. So it is really important. And don't ever backtest with lower quality tick data than 99.9%. I will put in the description where can you get that. I have no affiliation with the company or anything, but in my opinion, without proper quality tick data, you can't even try to, it doesn't matter if you are backtesting, because the real results will be so much different. So it is really important. The second thing is, and it is all steps, you have to follow them, because if you miss one step, you will fail, because trading is one of the hardest jobs on the planet to actually make money with trading. So you have to follow all the fucking steps. Now the second is, after the whole backtesting period, which is really a long time if you are backtesting with real tick data for 20 years on all pairs. After the weeks of backtesting, you have to put your strategy, if you like the results on the 20-year backtest with spread, slippage and commission, if you like that result, you will put the EA, and it is not a practice, so you can put it on demo account. It is just to make sure that the technical stuff works the same as in the backtest. So it is not the results or anything like that. It is just the technical stuff. If there is a bug in your EA or in your strategy, if it can actually blow your account in, you know, live markets, and you should add more security to it and stuff. Basically, these steps are my personal steps that I do when I start to trade with one of my EAs or I publish an EA. So this is the second step. Now, what is the third step? Because the second step is easy. You should put on a demo, a live account, I recommend demo account, your strategy, your robot with the exact same settings that you backtested with. You put it on that for like a month, and you just to see if it really works, and if you will put you know, like huge amounts of money on your system, it won't at least blow your account. So it is safe. Of course, there are no promises in trading, so you can make sure to make money, but you can make sure to not blow account, or to, you know, to have a security to only lose 1 or 2% and stuff. It is important. So the third thing is really important too, and this is the following. Now the third thing is, when you have done the second part, basically we already tested all the technicals, and now what you should test is the results, if they are actually suitable for your emotions, for your discipline, for your psychology, your human, you know, self. Because of course this is algorithmic trading, but most traders can't handle their emotions even in algorithmic trading. So basically what you will do is 1 month and an account that is small enough so you can't feel if you lose it all, but it is not like $2, so it is an amount that the EA, the strategy, can work with, and it is not that meaningless to you, like $2. So a middle amount, you know, and with that you will put the EA with all the settings and pairs on a real account. Now it is really important that now you should calculate all your risks, your stop loss level, all the settings, as you will trade on your you know, on your real account that you want to live off, or you know, your savings. And now you will test the EA for 1 month on all the pairs or the settings with the risk and that you want to take on your large account as well, your larger account. And it is a really important step, because now you will figure out if the strategy actually makes money, or it is just too slow for you, it is too the risk is too high for you, basically, or you know, that kind of stuff. Because, and of course it is a training, it is training yourself, because for most people the EAs that are actually working, they are too slow. And the problem is with that, you can't be profitable if these kind of simple human emotions can interact too much with your algorithmic trading, because you will micromanage your trades basically. So, and this is the fourth step. So the fourth step is, when you did all these things and you actually like these results, you should trust your strategy. You should trust the statistics. I would recommend to print out the statistics of the 20-year test and of the live account test as well, because and the trades, maybe the trades as well, because if you want to be profitable, you have to trust your system that it won't blow your account, you won't lose too much, and you have a higher probability to win than to lose. And you know, it is a common thing that if, like, you know, a losing streak comes along, most traders are freak out, and they will start to just close their positions by hand and don't trust the system anymore and just freaking out. And it is bullshit. You tested the strategy for 1 month, you tested the strategy for 20 fucking years, and if the losing streak is not bigger than the average losing streak or biggest losing streak when you were backtesting and live testing, then why you are freaking out, man? Basically the strategy works as it should. It is just a losing streak, and you see it in the statistics that it can happen, but after that you will win, and the wins will outweigh the losses, and it is just trading. Trust the strategy and the statistics, and then you can actually win, and it is powerful. So, you know, the fifth thing is really important too, as the other ones as well. So the fifth thing is don't close the trades too early. And I know you are saying, oh man, that it is an algorithmic trading profile. How can I close the trades too early? It is the system. Man, almost every trader closes their trades too early, and it means that they test the EA, they know the EA, and they don't actually trust it when some even minor loss comes along, and they will start to close their profitable trades, and they will leave the losing trades run. And it is the opposite as every major trader tells, that cut losses quickly, let winners run. And all beginner traders do the opposite. They cut profit trades quickly and they let losers run. Bullshit, don't do that. So I already talked about my sixth, and it is don't micromanage, basically. It is the whole second part of this video, that micromanaging will kill your gains, and it is so sad to see traders who are not strong enough emotionally and psychologically to actually let the EA run. And I know how hard it is. I blew several accounts in my trading, in the beginning of my trading career this way. Just fucking close, grab the money out of the market and let the losses run. Fuck yeah, it will, you know, it will goes back if I wait. No, fuck no. Forex markets don't work that way. They can go whatever the fuck they want, and with leverage you will blow your account. So I learned the hard way how to fucking sit on my ass and just wait for the trades. And actually I don't sit around, I travel the world, and therefore I don't even look at my trades just once a week. I will share my live monitoring of my EAs with you soon, because I've already started to finally run them on accounts that I can show you, on live accounts as well. Live, of course, not as well, of course. They are all live. So it is the seventh thing is just major. If you trade with too high of an amount per trade, you will micromanage. You will start to micromanage your trades, because it hurts when, you know, just as little as 1 or 2 or 3 or 5% you are in, you know, that drawdown. And you should, in my opinion, trade with an amount that, and it is really important, you can start to lose this, it is a pro tip from me, that you are trade with a percent when if you are in the maximum drawdown that the EA showed in the 20-year backtest, and you have that drawdown in any day, you are comfortable to lose that amount. Because if you are not comfortable with even the half of the max drawdown that you saw, then you are trading with too high volume. Me personally, I trade with 0.5% risk per trade, with a very very safe system that carries 1 trade per once on 1 currency. So if I trade on 10 currency pairs, it trades at maximum 10 trades at once. And even this way I trade with 0.5% per trade, because this is comfortable for me and I don't look at my phone every time, you know, and I can enjoy my love, you know. So yeah, this is really important, because if you don't do that, you will fail and your emotions will betray you. So let's keep it up, man. Ciao.